Hi everyone, it is Sunday the 17th of May 2020 and I'm having a look at the US indices. I'm starting off with Wall Street. And so last week I spoke about a couple of things. First of all, I spoke largely about the range that we've had. We had a kind of a bullish candle here followed by another bullish candle. These are generally called hanging men at the top of a move. We've got kind of another bearish rejection candle here followed by a bullish candle followed by a move down and then kind of a bit of a wick. So all of this, to get a sense of perspective, price is largely still range bound. Okay, this is still the same type of behavior, both to the upside and to the downside. You can see price pushing up and then price pushing down and then pushing up and pushing down and being pushed back up. There's loads of indecision in this. If we look at it on the monthly basis, what we haven't really done is broken above the high of April. So we haven't followed through on that, and we're heading now into the last, at least certainly the last third of the month. So looking at the daily, we're technically in a downtrend. And so what I'm going to be, and we've also broken the lows, as I spoke about. This is on the Dow. So I'm going to cautiously be looking for moves to the downside. I suspect that because we're still within this range on the weekly, that the game, so to speak, isn't over. And that the market will not reliably commit to moving in any given direction, which means that I'm going to be incredibly cautious until, as I said, price breaks out above the high or commits to heading lower. But I do think it's significant that we did break a couple of these most recent lows. Look at the S&P as well. We produced a lower high. We broke the low as well. Bullish rebound to that. So there's still lots of buy orders sitting at these levels. The weekly is still a mess. We're still stuck within that range bound. We haven't broken above the high. We haven't really broken below the low. We're still stuck within that range, and we still haven't broken the high of April's candle. The Nasdaq is very different to the rest of them, and a possible explanation for this is that, again, largely we are now a technology-based society, and therefore most of the money is leading into these areas, and certainly with stock buybacks that are happening as a result of the stimulus packages, there could be a very real explanation for a recovery in this particular area, in the most popular area. So we've actually produced a bullish candle, followed through with a bullish candle on Friday. And so generally, if this follows through on that, we should reasonably expect this to attempt to go a lot higher. We have not produced the same weekly range candles on the Nasdaq at all. And of course, the monthly has recovered. So of all the indices, this one has shaken off everything and has not been impacted as badly. And I think that that's worth noting. There's a difference between those. If we go and have a look at the FANGs, we can see they're also principally bullish. They've got some good resistance up here, and we'll see if they do manage to break through that. But overall, looking very, very bullish. If we then go back to the S&P, which is a much broader base of different types of companies around the world, different types of industries as well, we can see this is more likely a more accurate, especially if we combine both the Dow and the S&P 500 together. We'll get a much more accurate representation of what the global economy is likely in terms of the picture of the global economy. However, in terms of trading opportunities, the only one that I would, and again, still cautiously look for long opportunities on, would be the Nasdaq and its constituents. If I then move on and have a look at the Russell 2000, we've actually broken the lows here as well. We've also produced a bit more of a bearish candle. We're still stuck within this range, but we're now starting to get into an area in terms of equilibrium on the weekly where a move to the downside would make sense. Keeping in mind, again, as I've said before, there is no clear trend on the monthly. There is no clear trend on the weekly yet. We have to wait for the new trend to form. And so we have broken lows. All we've really kind of done here is confirm that we've broken whatever trend was in place beforehand. So you could just see here overall the market is a bit listless, not really going anywhere. And although that if I was aggressive, I even still cautiously, there's just not enough evidence to go short here, but I am prepared for those. And there were a couple of shorting opportunities I did take last week, so those were nice and profitable. But certainly, as it always does, price bounces very aggressively off these key levels. And so nothing in my trading plan has changed. I still anticipate aggressive bounces off these key levels, and I'm very quick to take profit as I go. And I'm still not entirely sure when we're going to get out of this, but I'm keeping an eye on those weekly candles. So this is really kind of a bit more of a longer game being taken here. Looking at the EU as well, looking a little bit more bearish. These are starting to head lower. We could see Germany. Also, a lot of these now, when we step away from the US, a lot of the other markets are looking that little bit more bearish. And again, none of them have broken above the last month's highs. So we haven't followed through on that. And in fact, even looking here as well, this the Hang Seng looks as though that's potentially forming a bit of a head and shoulders shape and potentially going to break the low there. So, and that downside, I beg your pardon, the weekly looking nice and bearish here as well. So for me, that is a nice potential opportunity to the downside. Again, I'll be making sure that there could be buy orders sitting at these key levels, and therefore there could be strong bounces, and I'll be prepared for that as well. So in other words, if I do take any short opportunities and the market does bounce up aggressively, I don't take it personally, and I don't get all upset if I end up feeling like if I'm trailing my stuff, for example, and I'm up 3% and then I end up closing out at 0.5%. Unfortunately, that is just the game at the moment, because the market is still, there's a fair number of both bulls and bears in the market. Neither side has effectively won. So I'm just highlighting that we've been doing this now for over a month, and that is just unfortunately what the conditions are at the moment. Looking then at the Nikkei, this is also drifting to the upside, not looking as bearish. It has actually broken that monthly high, so that's interesting as well. And the point of this being is that that effectively it means coming down to that daily, finishing off here with the ASICs in Australia, that still largely range bound, and we're seeing a real mixture of both sort of bullish type of behavior as well as bearish in these markets. And so again, I'm just going to reiterate that there's no real commitment to either side just yet. It is the weekly is really a big clue as to the fact that the markets are just kind of very much uncertain about where they want to go, or at least they're in fair value at this point in time. Doesn't mean that we won't, that we definitely won't have another big move to the downside. No, it doesn't really mean that. Does it mean that the markets might continue to climb? Absolutely. But I am also taking into account that the Nasdaq is kind of in its own kind of league at the moment. If this continues to climb, it will pull a lot of the others up with it until it just can no longer do that. So for me, it's going to be largely about watching definitely previous and key resistance levels on the Nasdaq, because if it's going to take a hit at any point, that's where it's going to do it from. In the meantime, as I said, I'm still keeping an eye on those weekly ranges. Basically, it's going to be the same approach as it has been for the last couple of weeks. Moves to the downside, now that we have, I think, broken some key lows here, the idea of us heading lower is more feasible. At the same time, we had a really strong rebound from that. So there's a fair number of buyers below here looking to push up and get back in the market. At the same time, we'll see if the market follows through on that. So although this doesn't really sound like much of a plan, it actually is. Again, intraday will be looking for shorting opportunities, bearish price action on that 4-hour and below time frame. But also, I just really want to be aware of where these borders are framing this price action. And so again, I'll be keeping an eye on the Nasdaq, but my trading opportunities lie largely within the weaker indices, the FTSE, the DAX, the Hang Seng, maybe the S&P and the Dow as well. The Dow not really looking as bullish as it has in the past. And so that's it. Again, extreme caution, but there are some potential opportunities, and we'll see if the market does eventually commit and head lower, or if it manages to break out, but it's still stuck within its range.